Good evening, everyone. Brian Hoops here with Midwest Market Solutions. This is our closing market insider commentary. It is Wednesday evening, August the 18th. Thanks for joining us here. Now, grains were higher today, led by soybeans and soybean oil. Oil has went from a low made in the month of July, right at the end of the month, all the way to new contract highs as far as this December contract is concerned. We've pushed above the old highs from not only last month of July, but also June, also May, and now we're challenging the highs that were made on the continuation charts at the April timeframe. So those are some pretty significant highs, and it's pulled soybeans off of its lows. Make no mistake about it, we're going to have a big crop this year, but right now the market is focused on demand. It has already moved away from a supply market, but I think it will change back to a supply market down the road. We're going to look for, right now, market to focus on demand. We had another big sale of soybeans today, 391,000 metric tons of soybeans. That went to China, 381,000 metric tons to China. Trade will be looking for more business in the future days. Tomorrow we'll have export sales, and those export numbers should be outstanding for beans. Once again, last week they were a huge number. We'll see another big number for the soybean market. And as we look at some of these other markets, wheat firmed up here and rallied, led by Kansas City and Minneapolis both. Now, if you notice that September Minneapolis contract, it's above the December, telling producers it needs this wheat because we're having not only a little production shortfall compared to last year, but also exports at this time are increasing compared to last year. We're at a new record pace for this time. 124 metric tons of hard red spring wheat is on the books. Cattle futures fell. Hog futures rallied sharply. I think we are trying to put a bottom in the hog market. We're going to pull back here in the cattle for a ways. Still looking for the chart gap at 108.50 to be filled in that October contract. From spec standpoint, we weren't able to get our corn sold today. We're still long in the wheat and still short in the cattle. We did exit some gold today for some very nice profits. After the Fed meeting this afternoon, in the after market hours, we were able to trade out of our trade there, make about $500 to $1,000 on our gold trade, as the Fed said that interest rate raise would be imminent at some point in the future. I think it's unlikely it'll happen in September, very likely in December, however, if conditions warrant, and that dropped the dollar, and that should be a little positive for commodities tonight. Have a great evening. I'll talk to you in the morning. This has been Brian Hoops.